Hello, everybody. It's it's been a weird 24 hours, a very exhausting 24 hours. I don't know what to say. I don't know what to say. But the markets have been hit, especially Bitcoin. Bitcoin is the asset that tends to sell off during times like this, and there's a lot of worry right now about the Strait of Hormuz and a whole bunch of other stuff. But we're just going to talk about data and facts and rotations and profit taking and some new assets. And is it worth going off on a flyer? And by the way, I have to mention as well, the robo-taxis are flying around Austin right now. All of our friends of the channel are there. Herbert, CERN, Sawyer, everybody's enjoying their rides right now. So that thing at least is happening. It's just unusual that the transportation world has just changed, and so has some other things in the world. But anyway, I'm just going to get on with the story because that's the easy part. This one is about profits and rotations and some new assets as well. Let's get into it. And thank you to the mods in the chat, T&D, Sean D, K8, and everybody else. Not financial advice, and all the questions come from Patreon. Let's get into the first question. This is from Lance. Last post was 5 months ago. So, and I get this all the time, and it's important to think in this regard. And no matter how many times I answer this question, it keeps coming up. But yes, there seems to be a consensus that the Bitcoin cycle peak will be in October 2025. Would it be wise to take profits before October 2025 to avoid the possibility of getting caught on the wrong side of the expected peak sell-off? Thank you for sharing your enthusiasm. It has carried me through the last 4 years. Woohoo! My first Bitcoin buy was April 2021. Wow. I remember you nailed the top, the first top in April 2021. I remember that. I remember a few things in that date. April 14th, 2021. Let me see. That was the Coinbase IPO when it just tanked after that. That was like top signal for the market. Anyway, very manipulated cycle. But let's get into a couple of things because we got to cover a few things. First of all, let's look at one of the tools. Right now, actually, let's go live to Bitcoin price. Bitcoin price is $99,100. All right. The reason we built all these tools, I'm overlaying two on each other right now. One is the profit taker, and they're using Bitcoin as a chart. And the other one is the TABI model, top and bottom indicator. TABI model is about to go yellow. All right. This is how volatile this beast is. If you just said to the profit taker, I have one Bitcoin, I want to take some profits, I want to retain at least 40 to 60% of my Bitcoin, boom, it would have sold you out at level 6, layer 6, and 35% of your Bitcoin would be sold at $109,933.45. Boom, that was the signal there. And what's even crazier about this, we've gone from level 6 all the way down through level 5, level 4, and we are now beneath level 3. Level 3 is at 101,700. If I added more layers, who knows what other layers would be in there too, maybe even as far as level 2. That's how crazy this market move has been. And that's why, yes, you never, ever regret taking profits. But humans sometimes don't want to let go because you know what's worse than taking profits? Is seeing potential of gainers missed. So people actually have less pain and hurt from being in a loss-making position than not making profits. So for example, let's put some color on that. Imagine you miss the top at 120 and it goes down to 90 or 80 or 70, say 50K swing down to the downside. People are less upset about that than if Bitcoin went to $160,000 and they sold too early. That is the psychology. Imagine selling at 110 per this model and Bitcoin goes to 160. That would cause them much more pain and anguish than writing it down $50,000. Instead of writing it up 50 grand one way, they write it down the elevator 50 grand, and that would cause less pain. That is human nature. And that's our reptilian brain. And I'm sorry we have one, but that's why we have models to help us have that discipline. Okay, the discipline that you're looking for, Lance. What should we do? And remember, we have optimized the profit taker to layer you out. So you're still on the wagon, but you can actually calculate your opportunity cost. And remember, if your cost basis, like most people here, would be like 20K or even less, selling at 100K or 112K or 109K or 120K is not bad at all. You're still making a lot of money. Okay, so please don't forget that. Very important. Now, let's talk about where we're going. Yes, there is more unrest in the world, and it's having a huge impact on markets. And of course, this thing always happens on a bloody Sunday, bloody Sunday, when the only thing you can dump is Bitcoin. And that's exactly what's happening. But shout out to Sanjay. He just sent me this literally right before I went live. This from Cointelegraph. And they're basically saying, history suggests Bitcoin taps 330K this cycle. 330K, that's up 300% from where we are now. And again, I don't know if this is going to happen or not, but people go mad if they miss out on this. But it is prudent to take profits along the way. Now, there's another thing I just forgot to mention too. What you can do here is on the layers, if you are in a tax-friendly situation, or if you're trading IBIT in an IRA, 401k, superannuation fund, ISA, wherever you are on the planet, some tax-free vehicle, there's no problem selling at 112 and then buying back in at 99, then ride it back up again, sell at 112 again or 110 and buy back in at 99. You can do that all day long. That's the great thing about layers too. But if you are paying taxes, there is a penalty that goes along with that. You go from long-term capital gains, for example, if your cost base is 20K, you pay 20% on that. And then if you buy back in and you take profits again, you could be paying 40% on that in short-term capital gains. So be careful of your taxes, everybody. And we don't know how high we're going to go. If we make it to 130K or 150K, I will be delighted and I will be rotating. And that's all she wrote in this one. Thank you so much, Lance. It's been a while since we've seen AirSaver. Last post was a year ago. We're pulling up the post from people who haven't posted in a long time, which is cool. It's good to see them back posting questions again. For those that are holding Bitcoin, all Bitcoin on cold wallets with a very low cost basis, can you discuss strategy involving de-risking to ETFs and capital gains? Many banks may soon allow you to deposit Bitcoin and take loans on it to avoid capital gains. Yes. So it would seem a shame to pay those gains right now. And right, when you may not need it in the future, you would be able to take a loan against your ETF in the same manner. Interesting. We'll talk about that. And the federal government may also eliminate capital gains tax. Thoughts on de-risking 50% for safety while also minimizing taxes? Great question. I love it. And I think about this myself, de-risking things as well in my portfolio. Remember, de-risking is so important, and it makes me so happy that people are thinking along these lines. And yes, cold storage doesn't come without risks. But there's a couple of things I do want to touch on because you're touching on a couple of things. One, borrowing against your ETF? No, but they are marginable. So what does that mean? Well, basically, if you do move, for example, to the IBIT ETF, you will incur capital gains tax. There'll be long-term capital gains, so let's call it 20%, which is not the end of the world. Considering Bitcoin swings 15% in a couple of weeks, don't sweat paying 20% tax, everybody. You never go broke paying taxes, which means you're making profits. If it is a 20% capital gains tax, do not let that impede your decision-making too much, especially in light of safety. A bird in the hand is worth two in the bush. Remember that as well. All these little anecdotes. We'll also talk about not losing money as well later in the video. But you can use margin to buy and hold IBIT, but you must maintain at least 30% equity at all times. This is actually from Schwab Live. But beware of how volatile the asset is. And a sudden swing could lead to a margin call, forced liquidation. But at least it is marginable, which means you can borrow against it to buy more of something. You could borrow against your IBIT to buy more Tesla or Google or even more IBIT itself. So bear that in mind. But remember, don't get liquidated. Always be very cautious with your margin. First thing, so you can't borrow against your ETF but you can using margin. You can't borrow it like pull out 100 grand and buy a house. Technically, maybe you can, but it wouldn't be advisable. But it's a different type of borrowing against. Also, is it possible to get tax-free Bitcoin? Will the government make it tax-free? I think it's very unlikely. Everything is possible. It's a crazy world, but I think there's no way that'll get approved. However, we did see in one state earlier this week, I forget the name of the state, I think it was Ohio or something like that, where they made it tax-free for amounts under $200, so which is not bad at all. And then we will, Doc Intern, we'll be talking about that question coming up too in a minute, but probably only for small amounts. Don't bank on that horse at all. Next, what you can do, which is pretty cool, but there's a couple of little clauses here. There's that new company called CEP Strive. I'm a shareholder. I bought into it, but they have a equity for Bitcoin swap. So imagine you've got a whole bunch of Bitcoin at $100 or $10,000 or something. You can swap in under Section 351 of the US tax code and get shares in this new company. Think of it like a MicroStrategy type share for CEP. But from what I understand, and I could be wrong on this, you need to be an accredited investor to join the swap, which means you need $1 million in liquid assets or something like that. But you probably, if you are an early, low-cost basis Bitcoin investor, odds are you have $1 million already. So you could be accredited too on this one. So there are a couple of the options of where we are. So think about it. Maybe do a little bit of each. Pay some long-term capital gains on a small portion of your bag, convert it to an ETF, or move some to Strive, swap some there. And also maybe just keep some in cold storage. Maybe do a third. That would be some good ideas. But do not bank on this. I don't think Bitcoin's going to be tax-free. Who knows? Maybe in your state it could be, but I doubt it on a federal basis. Next question is from Ronaldo. Thanks for the continued amazing work. Hey, my pleasure. And your courage voicing freedom and common sense in the world. Yeah, unfortunately, there's not much common sense in the world as we saw over the last 24 hours, but we're not going to touch that. Now, when you pair trade, e.g. Tesla MicroStrategy, do you sell and buy at market when the time comes, or do you risk waiting for better buy-sell timing? I've done both and regretted both. This is a risky one. So let me walk you through exactly what I do and how I do it. First of all, I look at the ATR model and the optimized trend for trading. I'll show you exactly how in a minute. Then I use the optimized trend to determine when to swap. So you might get a signal on ATR to swap, but you stay in the trade till the trend turns. Very important. And then regarding timing, when it comes to actually selling a position, I use the 5-minute chart, sometimes the 3-minute using the Confluence model, and I can make an extra $1 or so if I sell something first. Imagine I'm selling MicroStrategy first, and then I'm pair trading into Tesla. I have 2 huge screens open. I have tons of different charts open. I have like 1-minute charts, 1-second charts, 5-minute charts, and all the indicators loaded. And then I determine, okay, does this one looks like it's about to top out like MicroStrategy? I'll sell it. And I only ever sell on limit orders only, never market. Once you use a market order, you get mugged by the market makers. They say, oh, look at this. I won't say, I nearly said a bad word. Look at this person here letting us take advantage of them. No. Always place a limit order. And remember, there's lots of noise in the price. That's why I look at the 1-second chart to make sure I can land that limit order as well. Also, the way it looks actually on a chart is kind of simple. So imagine this is the ATR model. Let me walk you through the position. This is the pair trade of MicroStrategy divided by Tesla. On the daily, you can use the 12-hour, the 8-hour, the 6-hour, the 4-hour, whatever you like. Sometimes for my swings, when I was aggressively swinging between these two in a trade tax-free account, I was doing it on the 1-hour and 15-minute chart. I wasn't using the longer period, but you can because then it's safer. So when you sell, for example, this is MicroStrategy over Tesla. So when the chart goes up, it means MicroStrategy is outperforming Tesla. The ATR shows all the layers of support and resistance. Sometimes you break through. And then I overlaid the optimized trend on it. That's the big blue thing as well. Now, you see, if we started, say, early 2024, you'll see a buy and then a sell signal to tell you to move from MicroStrategy into Tesla. But no, you don't. And then you get a second sell signal to move. But no, you don't. You don't because the optimized trend is still blue. The trend is still up. When that turns, that's when you move out. You may not pick the Pico top, but that will tell you. So basically, you sell your MicroStrategy into Tesla after you get the signal or multiple signals, but when the trend turns, then you go down. And then you sell back your Tesla into MicroStrategy after the signal when the trend turns back. Very important. You do the same thing, wash, rinse, repeat. And then you time it using the 5-minute chart. It's that simple. If you're a patient, you can just play this game like this all day long for many assets. But there's another way, which I'll show you as well. This is from Metafy, trying to formulate a rotation model strategy, but finding it very difficult to commit to selling any Tesla or MicroStrategy for the model purposes, given I've worked so hard to build significant bags, and they are both due potentially significant runs very soon. What can you say to persuade me? Regards and thanks, everyone. Thank you for what you do. Trust the model. This is the rotation model. Going back to the pair trade, you can turn off, like it's designed for 5 assets. You can turn off 2 of the assets and you can have one as being one share where you retain 99%. So basically you're just pair trading 2. Here you see how the trading model would work for, turn my camera off. This is just over a short window of time, how it would pair trade using the rotation model. And there's nothing wrong with using the rotation model with the ATR model with the optimized trend to give you all of that confidence of when you can pull the trigger or not. This tells you just over a short period of time, your capital from just holding 2 assets, MicroStrategy and Tesla, 100 shares each, goes from 21K to 69K if you just hodl those 100 shares each. If you rotate, your 21K goes to 118K. So you get 460% ROI versus 227% ROI. And this tells you exactly when to do it. And it's that simple. Trust the model. Be in the winning assets. And you're good to go. Very simple. Cornhead. Absolutely love what you've been doing for the community. Thank you so much. Thank you for being here. I've learned so much over the last 4 years with you and appreciate the team's great model building. I've not even scratched the power of the models. I have your AI suite, and I'm particularly enjoying experimenting with your rotation model since its release. So I did an experiment. I asked Grok 3 to pick up the top 30 US stocks that are highly volatile and have a high Sharpe and Sortino ratio, and asked Grok 3 to make 6 groups of 5 uncorrelated using the top 30. Interestingly, and very surprising to me, Grok only picked 4 of the 12 that you had recommended earlier in your video. I then applied the same rotation settings to all Grok's assets, 5 assets per group, and not even one was remotely as close to the ROI as my IA-based group from your list. Grok's highest was 152% versus IA's, mine was 1,200%. My main question is, if Grok can't pick the right assets to use, how can the common man do it without your expert help? Ta-da! I love this question because everybody be careful. AI is great. I'll jump off of this. But it is crap at finance and models. It doesn't know anything about what we do or how we do it. Imagine if it did. Everybody on the planet would be rich overnight, okay? It is not that smart. In fact, to prove how smart it is, guess what? Elon Musk confirmed that Grok is the big R at the moment. Update coming this week. Update to Grok 3.5. Remember, AI hallucinates. AI sometimes is fed by mainstream media. AI listens maybe to Jim Cramer. AI doesn't know how to do finance. There will come a day when it is super intelligent. And yes, that is the day that I'm afraid of. And the day that comes, then my job is done. We have lost the opportunity to make excess returns in the market. AI will take over. But once that happens, we now have a level playing field. Okay? Not everybody gets rich when ASI comes. Okay? everybody will be the same. This is the window of opportunity that may last another 1 to 2 years. Then the world changes. And I've been stressing this since November 2022. So remember, Grok has no clue right now. Do not use Grok or any AI for finance. It's going to kill you. And user 28 did the same thing. I asked Grok to look at the InvestAnswer products and give me the best option to reach my goals. What do you think about what I said? So you have a whole thing. You got a whole bunch of different assets, which models are the best, how many shares you have, blah, 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 which products. And of course, it gave you an answer. When I went through all these answers that Grok gave you, it showed you it doesn't know what the models are, what they do, how they operate. It is completely clueless. Nice try. But the only way Grok would be able to answer this is to analyze the inner workings of these models and analyze all the results from these models. It can't do that. It completely has no clue. And it talks about some assets that don't even apply to these products because they don't have a year of history. So again, remember, as Elon said, Grok does not know. Do not use AI to make finance decisions, everybody. The day you can will be the day you'll never see me again. Remember that. So that'll be fun. I'll start making health videos to keep us all alive because we'll be able to enjoy our bags. Who knows? Jay Pagan. That got a bit dark. But anyway, that's just how it is. Jay Pagan, great day to you and the amazing team. Great day to you too, buddy. Once the SOL ETFs are available, what do you believe is a better play? SOL proxies like CYFRF and DFDV or a quality ETF? By the way, in full disclosure, I have both of those. Very heavy DFDV options position too, as you all know. Thank you, Sir James. And as usual, nothing but love for the I team. Woo. Let's get into this. Now, I do want to step out for a second. I remember distinctly back in early 2024, people said, oh, once the ETFs hit, MicroStrategy is going to die. Well, no, it's not. It didn't. So proxies are still going to be fine when the Solana ETF comes. But there's a couple of things I do want to show you. This is, again, another pair chart. Remember, everything is a pair, ladies and gentlemen. Everything is a pair. I say this all the time. This is MicroStrategy divided by IBIT. Okay, when the chart goes up, MicroStrategy outperforms IBIT. When the chart goes down, MicroStrategy underperforms IBIT. Very simple. If you go back to the beginning of this chart, which is, what would that be? 14, 16 months ago, something like that. 18 months ago, year and a half, you'll see there is no correlation between the proxy and the ETF. And you know why that's a good thing? Because then you can pair trade between them like a demon all day and it's magical. But you got to be on the right side of the trade with the right process and the right tools. Okay. And proxies are always more volatile, but often they tend to oversell. And that's when you buy them. And then you rotate out of them when they overheat. Look at things like NAV premium. Look at things like mean reversion. And all the answers are there, ladies and gentlemen. Real simple. So yes, maybe have a combination. Some ETF, some proxy. Maybe rotate trade, pair trade between them as well. It'll be glorious like it has been with MicroStrategy over the past 5 years as well. So enjoy the ride. Next question from Shanzi. I'd like to add more Solana to my portfolio to enhance the compounding effect through staking. Do you think Solana's current price is a good entry point considering its fundamentals and the potential ETF? Or is the crypto cycle stage a concern? Would dollar cost averaging be a safer approach? DCA is always a safer approach. However, let's have a look at what happened. Yes, in the last 24 hours, I bought first time in a long while because I now know that the ETF is coming. We are 95% certain of that. And this chain is stupidly cheap. The dApps and the chain itself trade at about 15 times sales. It's the only blockchain in the world even remotely close to that. Many of them are trading at 1 million times sales. It is insanely cheap. I just heard as well, Jupiter this morning has done $1 trillion in swaps. $1 trillion. The market cap is less than $1 billion. It does $1 trillion in business. It's bonkers. I love that little, the GIF where the guy goes. Anyway, crazy. So yes, the economy is booming for Solana, absolutely ripping, and Bloomberg say there is a 95% chance of the ETF coming this year. So nothing but goodness. And if you play where the puck is going to be, that thing is going to get ignited. Let's have a look at the chart real quick. Just a couple of things. We're not looking at anything but what we call the Confluence cloud. As you can see, the trend is still down because we do have a little bit of macro uglies out the window. Solana's trading on 130 as we speak. And right now, we technically have a buy signal because whenever Solana falls out of the cloud to the downside, typically that's a buy signal. It is extremely oversold. You'll see the same thing on mean reversion. We haven't had a buy signal pop yet on the 4-hour or the daily or the 12-hour, but that is beginning to shine a little bit. Also, the corollary is true. When you go above the cloud, it means it's overbought, which it's due for a pullback. There you can see the sell at the top and the two buys at the bottom. We are now breaching the cloud. So buying SOL at $129, yeah, it could go to 100, but the risk reward is definitely there. Very high probability we'll go higher from here. In fact, the model says so with an 87%, 86% chance of certainty. We're close to the bottom, if not at the bottom. That's why I bought in the last 24 hours. Hope you are okay with that. Now, not financial advice. It's been a while since we've heard from Dalmos. Last post was 8 months ago. See the pattern here? Hey, James, you talk about AI and energy a lot lately. I came across this data center company called Digital Realty Trust. They have been growing revenue and earnings fast since 2020. I think it's worth a look. If you can do a quick analysis, it'd be much appreciated. And thanks for everything you do. Best alpha on the internet. Appreciate you. So yeah, I do want to pre-stage this with a company called CoreWeave that did IPO recently, and that's gone to the moon, everybody. So all things in that sector, like this particular firm here, are also going to pump on this news. But I'm going to look at DLR, Digital Realty Trust, and also remember they do pay a dividend as well, just like any other type of REIT. So you have that angle. First of all, PE is 150. So yes, it's expensive. Now, I don't mind paying 150 PE for a stock if I know they're on the cusp of explosive growth over the next 1 to 2 years. However, the earnings per share growth rate is down -4%. And even just earnings growth is only 1.5%. So I wouldn't say they're absolutely ripping it in earnings too much. But let's have a look deeper. The other thing that's really peculiar is there are no retail investors in this stock at all. Retail investors own 0.0176% of it. It's like, huh? So this is not known, and it's only owned by institutions. Very weird. Also, the debt leverage, the debt scares me. I do not like companies with high levels of debt, especially in a high interest rate environment, because the cost to service that debt is insane. They have nearly $20 billion in debt, very little cash, $3 billion in cash. So that odds kind of scares me a bit, and their interest coverage is also very low, which could bring about some bad situations in the future, which I don't like. Also, the chart is looking strong, and I attribute a lot of that to the CoreWeave IPO, which did very well. And if you look at this chart and where it's going to all-time high, there's probably a 9% upside. This trend is still strong. Again, coattails of CoreWeave, I believe. Didn't mean for that to rhyme. And we'll see. Would I touch it? No. Will it go up 9%? Yes. Does it have a great long-term future? There are better assets out there. Far, far better assets out there. And I will be doing a detailed analysis of some of the better assets coming in the very near future, and I call it the 2030 bag. So wait for that. Subscribe for that one. That's going to be a banger. I don't know if I'll actually share it publicly or not. Maybe just Patreon. We'll see. Anyhow, hope that helps. And it's been a while since we heard from Yorkshire Pudding. I always see Yorkshire Pudding in the chat, though. The last post was 3 years ago. Hi, James. We know that spiraling government debt is a massive issue and one of the reasons that we all Bitcoin. This debt acceleration seems to have started around the early 2000s. So my question is, what are they spending it all on that they weren't before? And how come governments could live more within their means in previous decades and maintain debt to GDP ratios of around 40 to 50%? Obviously, paying back this debt now accounts for a fair amount of the spending, but what is the rest going? Actually, they're not paying the debt back. They just keep putting things on the credit card. They are never going to pay that debt back. So let's try to explain what has happened. First of all, shout out to debt, 37 trillion in the US. And by the way, even though this is a US chart of the US debt that just broke 37 trillion this week, it applies to every country in the world. Every country is built on debt. All right. This is not an isolated chart. Now, what are some of the reasons for this? Let me turn off my camera. First of all, after World War II, there was a lot of growth, very growth. There was a lot of tech advances. There was the internet, etc. And that all helped reduce debt. We'll talk more about how that could happen again, theoretically. But in the 2000s, everything rose sharply because there was a lot of tax cuts. There was a lot of increase in spending. There was a lot of increase in healthcare, a lot of aging population. There was a lot of crises like the GFC, global financial crisis, 2008, 2009. And then we had C19 in 2020. And that all is like governments are like just spending, like money was going out of fashion. Just throw it on the burner. And then deficits right now, 2 trillion and growing. Debt to GDP was, you're correct, 40 to 50%. And now it's 130% and going higher. But the future outlook is absolutely horrifying. That's why I make videos, okay? 37 trillion, 2 trillion deficit. In a year, this debt will be 39 trillion, maybe $40 trillion, okay? That is absolutely insane. If you imagine there's only basically 50 million people in the US that pay taxes of any decent nominal amount, 50 million people, they are the ones that have to try and service that nearly 40 trillion in debt. The numbers are astounding. Okay. Again, as I say, if the US was a company, it would have been taken out the back and shot many years ago. Okay. Dead, bankrupt, toast. Nobody would lend up money. And we're seeing some of that happen right now where nobody is lending the US money, which means the treasuries aren't selling unless the interest rate is high. Interest rate in debt currently is 3.3%, but it's going to explode to 4.5%. This is the big fight going on, which will grow the interest payment on debt to 1.7 trillion from 1.25 trillion right now. And therefore deficits will grow. And even though entitlements have been growing, they're going to expand even further. This is what I refer to as the UBI world. Okay, all over the world, the majority of humans in a country will be dependent on universal basic income. Okay, more than 50% in some way or another will be dependent on the government. And these people will vote a certain way that pays them the most benefits. And this will expand the debt. And this will bring huge long-term fiscal stress. And I am painting a very ugly picture, but anybody with 2 brain cells knows what's coming. It is horrific out there. I'm not going to sugarcoat it. It is absolutely brutal. Let's go back and look at this chart one more time. Brutal. Okay. There is no escaping this unless we go back to post-World War II. The only hope hinges on AI, automation, ASI, humanoid robots, etc. But even with a huge amount of explosion and growth in GDP, the debt is growing at probably a faster rate. We're at the point of no return. US is on a path to death. Doge, the swamp killed Doge. The interests wanted it done, and that's why it was a very dark time so far this year for people like Elon Musk and company. The government does not want to stop spending money. It will never stop. The only way out is extreme growth, which will probably be impossible to escape this matrix. This is why we Bitcoin. Yorkshire pudding, I think. Thank you for the question. Sorry for painting such a grim picture, but be in hard assets, everybody. Don't hold cash. And that UBI future is coming, and that's only going to accelerate with AI and ASI, which we'll talk about in a minute, too. Now, hopefully I hate answering these dark questions, giving dark answers. But again, I'm not going to sugarcoat things, but that's just the reality. So hope you still like the answers. Major Koenig, hello. I'd love to see you explore some fresh stock ideas and hopefully help me identify another strong addition to my portfolio. I have Tesla, Palantir, HIMS, SOFI, Hood, and AMD. All good. In fact, Hood and AMD were the two names that Kathy Wood bought last week. Nice work there. Interesting plays. I used to be a big believer in fintech, but now I'm much more into AI. AI and crypto, they're my two narratives. Now, I'm also holding separate crypto portfolio. Sol, Bitcoin, NOS, Jupiter, and Zeus. Jupiter is a killer in a good sense. So yeah. But I'm not looking to allocate additional resources there. Good, because we're getting hot in the actual crypto market. In fact, let me check on the crypto prices. Crap, things are weak again. Bitcoin's under 98,700 bucks right now. It keeps on going down. It is a nasty, nasty weekend out there. Anyway, lately, a few companies have caught my attention. Lemonade, FUBO, HNST, Rank, and RRU, mix spanning new age insurance, entertainment, retail, and defense. In my view, some of these names could benefit from AI tailwinds, while others may ride the wave of increased defense spending in Europe. Yes, that's particularly true of, I think, Rank and RRU. I'm planning to hold my current positions through at least 2028 to 2030 with some of the rotation model, and I'm looking to add one or two positions, 3 to 5%, trimming a bit of my Palantir stake. My entry was around $8 to $10. We just played it very well so far. Yes, it sure has. It's 130 last time I checked. Thanks for all the great work you do. Look forward to your quick take on these names. So I started looking at them, and I started looking at Lemonade first. I know that was a hot fintech in the past, but then fizzled out very quickly. I did go through it, and I actually spent some time trying to get a quote. And I didn't get a quote from Lemonade, but I did get referred to another company called, what are they called? See if I can see it here. I can't make it out. Some little agency there as well. And I know what happens typically after this. You get the quote, and then you get referred, and you give all your information to another company. Then they call you up and they say, well, yeah, we can't actually sell you the insurance for $3,418. It'll be $12,000. Okay, so it's just kind of a frustrating experience. Insurance is an old, stagnant industry. They're not going to make it. They make you answer all these questions, and then they don't give you a quote. It's a very frustrating experience. However, the revenue is growing, but they're losing a truckload of money. So they do have a lot of cash, though. So of all of them, even though I wouldn't touch it with a 40-foot pole, Lemonade is the most interesting. And I didn't do TA in these or anything else. Then I looked at FUBO. Huge amount of debt, scary debt, losing money. I don't like that. Two things that nix it for me. Then I looked at HNST. This is interesting. They turned profitable. They got a lot of cash, not much debt, but they don't have any growth. And I need growth. Okay, it's real simple when you analyze stocks in this day and age. Either they're on the cusp of massive growth, like Tesla, like exponential growth, or they dominate markets, like Tesla, energy storage, robots, etc. Or they're very profitable with a lot of cash and a lot of growth. Okay, this is missing the growth. And then I looked at the other one, the RNK, and I couldn't find any proper financial data on this, so I couldn't make a decision, etc. And I just got frustrated because these guys, they were just on the all-in pod yesterday. I listened to this at 200%, and they went around the table. What are their choices for the future? Okay, if they, same type of question that was posed to Kathy Wood. If they had to buy one stock, what would it be? One asset, what would it be? And it wasn't Bitcoin. But again, this guy in the top left, I think his name is Thomas, he picked NVIDIA number 1, Tesla number 2. Jason in the middle, Tesla number 1, Google number 2. Shamath, Tesla number 1, Google number 2. Shamath sat in meetings with Elon Musk last week. His mind melted around humanoid robot, around Dojo, etc. He said they are making their own silicon, which blew him away. And then Freeberg, Google number 1, Tesla number 2. Remember, he used to work at Google, and he believes they could be on the cusp of something. And then, of course, we have David Sachs, loves crypto and loves Tesla. So when you look at these very, very smart people, and all of a sudden you see Tesla, 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 interspersed Google twice, 3 times, and NVIDIA once. It should make you think, why dabble in all these little companies when they're not on the cusp of something that's huge from an AI perspective? You want something with an AI tailwind? Listen to these folks. Don't listen to me. Listen to these folks. They know how to allocate capital. Okay. The other thing as well that's so important, and I'm spending a little bit of extra time on this because I want people to understand. I always call it always balance risk and reward. Yes, there might be a faster horse, but could that horse break its leg at the last furlong and not make it to the finish line? Possibly. Okay. Don't always chase the fastest horse, but chase the fastest horse with the least amount of downside risk. Because, as Warren Buffett would say, never lose money. Rule number 1. Rule number 2, I love this one. Never forget rule number 1, okay? Yes, it might be exciting to go off on a flyer. And if you do, play with like half of 1% of your portfolio. And if you make a quick profit, take your money off the table and let the rest ride. That's how you play this game. Real simple. Otherwise, do not risk things. Now, I for me to do a proper justice to analyzing these companies, it takes a long time. I always dig into the list because sometimes somebody will uncover a treasure, but none were uncovered this week. So, no offense. And how much Europe spends on military, I don't know, but I don't like military stocks anyway. So I stopped there. So remember those rules, everybody. A lot of stuff in today's video that's important. And favorite part is Charlie, our latest adoptee, the river otter. These guys are cute. I spent my youth looking for otters and I never found one. I even tried to build a dam. But anyway, he's blind in one eye because he has difficulty grooming himself. And his fur becomes matted and gives the illusion that he has spots, but now he's taken care of. Thank you to the Bush Wildlife Organization. Tomorrow morning, DCA, as usual with the team. It'll be an interesting DCA because a lot of people are very scared. A lot of people getting really, really, really bearish. A lot of people panicking. Let's see if it's the end of the bull, and for all should have taken profits at the top. We'll see. And don't forget to like and subscribe. I'm going to do some live questions right now. Throw myself up big. And thank you to the team as well behind me, who also work on Sundays. Woohoo. We're 7 days a week here. Thank you, everybody, for putting up with me. Now, let's get into Clark. A friend lost his Bitcoin in a social engineering scam. Would it be worth rotating slower horses, Ford, John Deere, Nike, into Bitcoin at this point in the cycle? Clark, timely question. Buying Bitcoin here, I don't believe the cycle's over. You saw Cointelegraph believe we're going to 300,000. Bitcoin is 98.5 as we speak. I would definitely get out of those slower horses. Ford, I think, is a dead company. Nike is going to be hit by the tariffs in Vietnam, etc. And John Deere, I think they make tractors and stuff. Yeah, I would not, even though Bitcoin's riskier, if their time frame is 3+ years, yeah, absolutely. If they need to get in and out of the next 6 months, stick with the slow horses. You never know. Could be risky. CPK 2001, thoughts on custodial accounts like an iTrust versus ETFs. I don't like things. I'm very suspicious of anything that's advertised very heavily. And I know all the YouTubers pump the iTrust capital. I heard the fees are very high. I don't like things that are pumped. So stick with ETF. I think ETF is safer. And also, if you look at the brands like the BlackRocks and the Fidelities, they can't afford anything to go wrong because their reputation is worth trillions, literally trillions. They won't screw up. Whereas a little company like, I don't know, one of these little custodials could. So be careful. Doc Intern, thoughts on rotating in 401k from MicroStrategy to Tesla between now and MicroStrategy Q2 earnings call, then rotating back. Yeah, so dock and turn, it's very important. When you look at this play, you got to look at the macro chart of where Bitcoin is right now. Selling Bitcoin now, I think, would be a mistake, which means selling MicroStrategy now would be a mistake because it's very low. I'll be perfectly frank. The Tesla robotaxi thing is real, but the market still doesn't understand what it is. So it wouldn't surprise me if Tesla sold off on, buy the rumor, sell the news tomorrow. We shall see. Either way, I'd love to see Tesla at 300. Make it happen. That'd be great. Then you rotate. So why don't you watch three things? One, the Bitcoin chart. Number two, NAV premium. If you see MicroStrategy NAV premium between 1.5 and 1.6, yes, that is a good time to buy MicroStrategy, not sell it. You want to sell MicroStrategy at NAV premium like 1.75, 1.85, up there. Don't sell at a low NAV premium. And finally, Tesla. If Tesla poops the bed, jump in. $300 Tesla. That's when I get greedy. That's when I rotate. So, but watch all of those things in combination. So you got to look at your ratios and relative valuations between the different assets. Actually, that gives me an idea. I need to create a model for that to look at exactly. Yeah. More on that later. You've got great questions, Doc Intern. Really appreciate you. B-Man63, health is wealth. IA is the most amazing community. Thank you, James, T&D, K8, and Sean. Yes, health is wealth. Remember, if you work your entire life, this happened to my father. He worked his entire life, retired, died a year later of cancer. I said to myself, I'm not going to do that. And here I am, we're retired and working every day. Anyway, it's fun. It really is fun. Thank you, B-Man. Psych experience. Thanks for what you do. And times when needed the most. Yeah, this is an ugly day. Sorry, it's an ugly day. Ugh. We'll see. C-Money. Hey, James, what are your thoughts on my portfolio? I don't normally do portfolios, but I said if somebody's really young, that's the exception. I'm 26 and goal is max growth because you have time. Awesome. Adding Sol and Tesla at these levels, you have, wow. C-Money, keep your security real tight. You have very nice bags. You're 47% Bitcoin. I won't call out what you have for safety reasons, but it's very impressive at your age. 180 MicroStrategy, woohoo. So if you add those two together, you're 22% MicroStrategy, 47% Bitcoin. So you are already very heavy, and then heavy Bitcoin. So would it be, you're 70% Bitcoin pretty much, 69%. And you're 12% Solana, 19% Tesla, and you have, whoa, a nice big bag of cash too. Yeah, I'd start upping. Okay, this is, we've had, as I've been saying for a long time now, we've had 80% of the juice squeezed out of crypto at this stage. 80%. If we go to 300K, I'm happy to eat my shoe, very happy, because there's certain assets I'll always hold some of. But at the same time, think about the rotation into the whole new AI, ASI world. You are too low there. All right. This is the risk of sounding like a broken record. This is the biggest revolution ever to hit mankind. It's bigger than the wheel, bigger than fire, in my opinion. This revolutionizes mankind in a very big way. And I say that with full sincerity. So you need more AI, ASI. You need to play. You got time. You're young. The next 5 years will be bonkers. Bonkers. I heard a cool stat the other day that, if you look at global markets, 75% of global equity markets could be made up of AI value. All right. Now, if you go back 50 years or 60 years, it was like oil, energy companies. And before that, it was real estate companies. But now it's going to be AI companies. So what you see today is going to get an awful lot bigger very soon. Be ready for that, pack for that, be behind the winning solutions. I'm going to actually pull up one more slide to make sure everybody saw it, as crypto sucks. And now people understand why I rotate into AI is because it is the safer bet. Now, where is that slide? I got to try find it. Just watch, always follow the highly intelligent, smart people. I'm going to pull up slide 42 just to remind everybody again. This is where you need to play. All right. Okay. This guy on the top left, I think his name is Thomas. Super, super smart guy. Wow. I'll be following him wherever he is. But look at the names. This is how you need to position yourself. And because 3 of them said Google, I've been a little bit wary of Google. I sold out of my Google and rotated into Tesla at the Tesla bottom, but Google could have something up their sleeve. I know they're going to be eaten alive on the search side, which makes up 50 to 60% of their whole business, but they may have an ace up their sleeve around AI. So I'll take another hard look at Google to see if it's worth having a little bit of exposure for the next 5 years. The fact that these folks all say Tesla, 1 says NVIDIA, and 3 say Google, that makes you think, Google may have something. Anyway, think of that very carefully. And yeah, see money. Beef up your start taking profits on crypto, like we just covered, and beef up your AI exposure. Try to get to 50% before the end of this year. All right. Use some of that cash to do that too. And think about buying a leaper as well. With that amount of cash, you might be able to buy 2 leaps, and that'll take you out to 2027. And that's when you get a lot more leverage from that cash too. Thank you for your super sticker, Andy Dogwan, Jay Weirs, Beat Corn Bull, Signal 103, Do Travels, and HPLW. And thank you to Sean D, K8, TND Tesla, and Mr. Keyframes, and everybody here. Sorry about the dark day. This too shall pass, and we'll get back to business. Remember, when things fall, there are people, not retail, but there's big players buying that Bitcoin, and there's lots of treasuries still to come. Have a good night, everybody. Thank you all for coming. Bye-bye.